All right, everyone, welcome back. I'm host Speaker Name, and I'm so excited to be diving back into another deep dive with all of you.
Yeah, me too.
Today,
Always a pleasure.
we'll be uncovering the secrets of the Singapore market. And guiding us through this financial maze is the one and only expert speaker name.
Hey, everyone. Expert speaker name here.
I'm so glad you're here.
Happy to lend my 2 cents.
Because we've got some fascinating insights from the investing iguana that we're going to break down today.
Absolutely.
Think of it as your, express ticket
Uh-huh.
to understanding what's moving and shaking in the market.
Love that. Express ticket.
Okay, so
Let's do it.
first stop on our Singaporean adventure, Mapletree Logistics Trust, or as the cool kids call it, MLT. Now, they recently sold a property in Malaysia,
Yep.
and this wasn't just some ordinary flip. They managed a 31.3% profit above valuation.
Now that's what I call a sale,
They raked in a cool 31.5 million Malaysian ringgit.
which, if you're wondering, translates to about 9.6 million Singapore dollars. But hold on. The real story here isn't just about the money.
Oh, do tell.
MLT is all about logistics, real estate, right? Think warehouses, distribution centers, all that jazz.
Right.
So this sale, it's part of a bigger strategy. They're freeing up capital to make even smarter investments in assets with higher growth potential.
So they're playing the long game.
Exactly. It's
Well-
like they're trading up for a shiny new sports car in the logistics world.
So are they going to be rolling in even more dough soon?
Well, this sale alone probably won't move the needle too much on their net asset value.
Okay, backing up for a sec. Net asset value. For those of us who
Right, good point.
aren't financial wizards.
NAV, it's basically a way to measure the company's underlying value.
Gotcha.
But even though the impact on NAV is small, the market definitely liked the move.
How can you tell?
Well, their share price got a little boost after the announcement.
So investors are giving them a thumbs up for thinking strategically.
Precisely.
All right, next up on our Singaporean safari, CSE Global. They're making some waves, too, with the proposed divestment of an industrial property in the U.S.
Yep, a cool US $29.3 million on the table.
Whoa.
But here's the twist. They're not just cashing out. They plan to use that money to buy an even bigger property in the U.S.
Really? So they're basically leveling up their U.S. real estate game.
Exactly. And that tells us two things. First, they're super bullish on their growth in the U.S. market.
Okay, I'm seeing a theme here. These companies are all about strategic moves.
Yep. And second, this new property must be pretty important for their expansion plans. Maybe it's closer to their clients or has better infrastructure, who knows?
Yeah, all signs point to some serious growth on the horizon. Now, how about we zoom out a bit and look at the bigger picture in Singapore? Let's talk wages, the forecast. Sustained real wage growth continuing in 2025,
Music to everyone's ears.
even with cooling inflation.
No, that's what I call a win-win.
Okay, but real quick, what exactly does real wage growth mean? Just for anyone who...
Oh, of course. Great point. It basically means that salaries are growing faster than the cost of living.
So people have more money in their pockets.
Exactly. And that's great news for the economy. Cooling inflation plays a role, but there's another key driver here: productivity gains.
Right, more efficient workers, more skills, more moolah.
Bingo. Businesses can afford to pay their employees more, which further boosts the economy.
It's a beautiful cycle. But are there any storm clouds on the horizon?
That's the million-dollar question, isn't it? You know, while things are looking rosy domestically, we can't ignore the global scene. Those potential U.S. tariff hikes, they could throw a wrench in the works.
Uh-oh.
Yeah, they could create ripple effects across the global economy and potentially slow down Singapore's growth, too.
So it's not all sunshine and rainbows then?
Well, let's not get too doom and gloom. We're
Yeah.
still seeing positive momentum. It's just that the magnitude of future wage growth is a bit uncertain right now.
Fair enough.
But hey, look at the bright side. In 2024, Singapore saw a healthy 3.4% real income growth. A nice rebound from the next 2.2% dip in 2023. So there's definitely reason for optimism, but we gotta keep an eye on those external factors.
Gotcha. Fingers crossed. All right, last stop on our Singaporean sojourn, Perennial Holdings. This company is doing something really interesting in China. They're targeting a very specific and very wealthy demographic.
Ah, yes, the Chinese boomers.
The ones who rode the wave of China's economic boom and are now entering their golden years.
Exactly. And Perennial Holdings has their finger on the pulse of this massive demographic shift. Get this, 400 million people in China are expected to hit their 60s in the next decade.
Wow, that's a lot of people.
Right. And this generation, they're not your average retirees. They're looking for high-quality healthcare, senior care, and all the bells and whistles.
So how is Perennial Holdings catering to them?
By being super innovative, they're integrating hospitals, rehabilitation facilities, and senior care right into their residential developments in China.
So they're building entire communities designed for this generation.
Exactly. They're not just putting up buildings, they're creating a lifestyle. It's genius. And because this market is only going to get bigger, Perennial Holdings is in a prime position to reap some serious rewards.
Talk about a smart investment.
Yeah.
Well, there you have it, folks. Strategic property plays positive wage growth trends, innovative targeting of a booming demographic. The Singapore market is a whirlwind of activity. So what do you think is the most significant takeaway from today's deep dive?
Tough one, but I'd say it's the importance of looking beyond the numbers.
What do you mean?
Well, it's not enough to just see the financial data. You got to understand why, the motivations, the implications behind a company's actions. Like, why is a company making a strategic divestment or targeting a specific demographic? It's about connecting the dots and seeing the bigger picture.
I totally agree. You've given us so much food for thought today. Thank you so much for joining us.
My pleasure. Always a good time.
And to all our listeners out there, thanks for tuning in to another deep dive. We'll be back soon with more market insights and financial adventures. Until then, keep exploring, keep learning, and keep diving deep.
See ya. Bye, everyone.
Bye.